Okay, fantastic. Good afternoon, everyone. Welcome. This is Jason with Top Shelf, and thank you for joining us. It's 4:30 Eastern, right on the nose, and we are thrilled to have Michael Liddick with us here today, Back to the Future Trading, who incidentally, if you haven't had a chance to check out his site, and if you happen to be a Back to the Future fan, has one of the best sites you're going to come across in a long time. We are big fans of his, and we've been very grateful for our partnership. Before I go any further, though, since we're at the end of the day and folks are trickling in here, let's just do a quick yes and yes sound check and visual check to make sure that you can hear me okay and that you can see the screen okay. Just go ahead and put that in the questions box if you could. Right on, Dennis. Thank you. Kathy, appreciate that. Lennox, right on. Perfect, perfect, perfect. All right, well, wherever you are in the world, thank you for joining. As always, we're going to keep these informal. Now, we get a lot of requests from time to time, and one of the things that we're constantly asked about is the ability to read historical data. Now, everyone knows there's a ton of historical data out there, but how on earth do you use it? And how on earth do you use it with any confidence? There are a lot of tools out there predicting a lot of stuff, but how do you go ahead and use historical data to your advantage so that you can find the right times and direction, any market setting, before the session opens? And is there even a way to do that? Now, that is exactly what Michael's going to cover, along with a lot of other things. I will tell you in advance, he's one of the best presenters we have. He's very entertaining. And it's an absolute pleasure to have him here. So before I turn it over to him, I'll just say in advance that this is, of course, being recorded. If you have any need for that down the road, we're going to send you a link so that you have access to the recording. And any questions you have along the way, Michael will go ahead and answer in the questions box. So that is the scoop. Michael, my friend, it's great to have you back. Thank you very much for joining us.
Hey, Jason, thanks. Just remember to tell me where to send the check to for that wonderful introduction.
There are several addresses.
Is there an offshore Panamanian account that a gaggle of reporters will discover someday, and Mrs. Jason will be highly embarrassed at your indiscretions?
I thought you said you were tutoring math students.
That's totally it. Yeah, if that's what they nail me on, that's I will go down swiftly. But I'll put up a fight. Trust me, I will put up.
Remember, everyone in the trading industry is a nefarious snake oil salesman. You have to start with that premise and work your way out. So, I'll see you at the secret snake oil salesman club later today.
That sounds perfect. This is, of course, I'm recording, so. I'll go ahead and leave you with this nice, friendly crowd. Hopefully they don't turn surly at any point. But thank you very much, Michael, and have fun.
I definitely will. Everyone, thank you for coming this afternoon. Please ignore that picture that was in the marketing materials. It is the best one I could find with the cleanest shirt that I have taken last year. I had a physical epiphany at one point, however, and I've dropped about close to 60 pounds since that photo. So a lot of things have changed, and I regret that you didn't see the better version of myself in the marketing materials. So I got to get better about taking photographs. What is going on here today? I see some names that I recognize. Mr. Landrum, good afternoon. Everyone else, it's just an honor and a privilege to present to you today. I promise we're not going to spend too much time in PowerPoint land. A lot of vendors have a lot of gurus and tool builders have this pre-canned 1993 PowerPoint slide presentation where they read what's on the slides to you, and it sounds like a scene from Ferris Bueller. Many people have underestimated the power of the MACD. Bueller. We're not going to do that. I promised today that we're going to cover 3 topics. And I am a big fan of Microsoft Paint, and I've probably used it more than anyone in the history of Microsoft Paint, except one guy. And if you get an opportunity, there's an artist who only creates his work using Microsoft Paint. He actually has a degenerative macular disease, and he zooms in, if I remember correctly, on the portraits and the paintings to draw his pictures 1 or 2 pixels at a time. And if you go through and you just Google that artist uses Microsoft Paint, you'll see that there are other people out there that are using this tool to do far better things. But today for me, I just want to outline what we're going to cover in the next 60 minutes. And I promise you, as an Eagle Scout with a father, a son who just got his Eagle Scout and another one who's on his way. Too late for my daughter to get in, but if she was eligible, I think she probably would have beat them both to the line at the time. 3 phases of today. Number 1, we're going to talk about data mining, and in particular, predictive times. 85 to 90% of people that are trading futures or Forex or equities are mired in price action based indicators that are lagging. Fewer than 10%, probably closer to fewer than 5, are using time at all. And unfortunately, that is a tremendous liability. And you'll see why here in a second. It's actually perpetrated by the banks to keep you confused and off balance. We're going to cover a manual method that you can use today. So when you leave here today, you will know how to do something that you didn't know when you started. We believe in education as opposed to salesmanship. And I want you to feel at the end of the 60 minutes or so that we have together that you've learned a skill that you can apply right after the webinar to be more profitable, more confident, to let your winners run and keep your losers short, on a short leash, forgive me. Number 3, we're going to show a not so manual method and describe a little bit about how that works. And we'll talk about 2 setups that I teach that are very easy to master, and we can apply those setups to the manual method or the not so manual method. At the end of that, I'll have a Q&A session for as long as you have a question about things, and I have a 100% honesty guarantee, no filter, whatever the answer is, first response, no whitewashing it, you get the unvarnished truth. And then number 5, if anyone's interested, Jason and the gang at Top Shelf have asked me to put together an offer just for you. That is not the purpose of today's webinar, although I would be honored if you wanted to be a part of what we're doing. And that offer comes with a monstrous promo code. And let's begin. So, predictive data mining is based on the concept of this question. Linda, what is BSS? Is that like a Judge Kavanaugh secret word that I don't know, but I should know? Like boofing or 4th of July? I just want to make sure I understand before we start where you're at, because you've written the most comments so far. Is BSS a technical term? There's like a hiss in the audio. I'm being serious. I'm not being sarcastic. Are you okay? I'm okay. You're okay. Is everybody okay? I would like to hear the webinar exclamation point, too much BSS. Okay. Is that like BFFs with a lisp? I don't know. I'm going to go. What should happen on the other side of the chart? I would like you to do the webinar. Like Mountain Dew, do the do. Okay, I'm doing the webinar. I need you to listen. Are you ready to listen and learn, or are you like that person at the comedy special who shouts out stuff when the guy's telling the joke? Let's go. What should happen on the other side of the chart? This is what I want to focus on here today, but I have to open your perspective to entertain the possibility of this. We've been in business 10 years, close to 5,000 customers. We are legitimate. I have the authority to speak to you and talk to you about this, but it starts from a blank chart. So right here, let me get rid of these drawing board things. This is the most popular US futures market in the world, the E-mini S&P. It's the largest, has the most volume, it's the most liquid, and over the past 10 years and probably close to 10,000 conversations with traders that are attempting to become profitable, it's the one that most traders break themselves on. It's the one that most traders lose their account attempting to manipulate and make work to their advantage. As I mentioned earlier, Linda, most traders are focused entirely on this side of the chart. Whether you're looking at order flow analysis, volume spread analysis, market profile, market structure, pivots, floor trader pivots, fill in the new fad blank name, insert now here, most of the time, most of the people are focused on that. You have put yourself at a tremendous disadvantage, however, because you're not focused on this. You forgot that your chart has a second axis. And about 10 years ago, when my trading partner and I lost $50,000 of a $55,000 account in 36 hours, we put our engineering minds together and asked the question, what is really going on in these markets? Dennis, when you're looking at these charts, I want you to start to look at them. We're going to look at this with the first manual technique in mind right here. I haven't looked at these times together with anyone yet. I'm doing this for the first time with you, and I want to walk you through the process. If I get hit by a bus tomorrow and you don't own any of our software, I want you to be able to do this in some respect. When we look at this chart, I want you to start to focus on the times that things are happening. So Lennox, I'm going to work my way through the lowest hanging fruit on this chart. And you'll see as I walk my way through manually, it may seem overly simplistic at the time, but there's a method to this madness, right? And let's try that. We'll do one over here. I'm picking the major swing pivots to the top. And then Linda, I'm picking the major swing pivots on the bottom side, the absolute lows as we go, and trying to find the middle of the pivot as we go. Okay. So James, when we do that, I'm going to come across here and I'm going to start to keep track of the times. So one of the first things I want you to learn how to do, Linda, is focus on drawing on your chart. When you appreciate and master a manual method, the automatic method makes sense because it gets you to the information faster with more clarity. So we're going to set that font as a default. And I'm just going to walk my way across really quick and fill in these times. Okay, and again, you may think that this is overly simplistic, but in a few moments, about 20 minutes, you're going to see there's a tremendous value and benefit to what we're doing. This is essentially what Google does, what Amazon does when you're browsing through their products. It's keeping track of your behavior patterns. It's taking note of the fact that you like soap that smells like lilacs, or you like survival products for Armageddon type stuff. You're the Y2K guy who wants to buy 50 pounds of powdered dehydrated chop meat, right? And so what we're doing right now is we're going through and we're scanning for behavior patterns in time. We're starting with the premise that perhaps lately there are times where the banks are making moves with intention. Something is happening intentionally at a certain time. Okay, and 9:39. So Lennox, can you see how we've essentially isolated a lot of the times? There's one more that I'm going to fill in here real quick. This big drop at 14:51. Okay. Everybody, so far so good? Let's save this blank chart as a template. Okay. Now what I'm going to do, here's where things really start to get interesting. I'm going to put this chart over here to the right and squish it down. I forgot to label one of the times, forgive me. Right there is 12:42. And now I'm going to open another chart for the same market. And here's where the process, the principles of data mining begin to become important. So we're going to load a blank template with nothing in here, just the bars. Again, we're not using any indicators. In Lennox, here's where things get cool. There are two places historically that we can look for times that are important. Now, Linda, forgive me, I'm going to go back here and use paint and draw some stuff again. I promise you this is the webinar, and I am doing it. Over the last 10 years, we've discovered that banks are hiding time-based behavior patterns in one of several different locations. In essence, if you think of it like a secret code, a gentleman's club, as it were, where they know things that a lot of people don't know. How many of you consequently believe markets are manipulated? That there are people in the world who know when the moves will go up and down tomorrow in the future, right now, already. There's already a plan for tomorrow, for next week, for next month. Dennis, this isn't my preference. I just chose 3-minute chart. We can do this with a 3-day chart. We can do it with a 30-second chart. We can do it with a 13-minute, 12.5-minute. We can use this technique using anything. So 80+% of people believe that the markets are manipulated, but they can't really piece together how that conspiracy works. Today being a Tuesday, Dennis, Lennox, we've discovered there are a couple places banks hide behavioral times. One of the first places they hide them, Julie, is vertically on a calendar. So, hey, Melissa, Wayne, Whitney, when you're looking for these times, Harvey, one of the first places that we're going to look for the behavior patterns to recur historically are known as a vertical analysis. So Lennox, we can go back into the past this way, specific to a weekday, in this case, a Tuesday. And again, we refer to this as a vertical analysis. And believe it or not, after 10 years, they've never really changed that time deposit. It's almost always in a 60 to 70% window of repetition and recurrence. And again, most people know markets are manipulated, they just don't know where to look. And we're going to see here in a moment how that would work doing it manually. The other way employs something called a horizontal analysis. And lo and behold, I chose the wrong graphic, but you get the point. There we go. We can look left on a chart, and we're going to do that here together. We're going to actually do it both ways. And they will embed and encode behavioral times to the left of the current day. So the times for Tuesday are in many ways dependent on what happened yesterday. Some markets, believe it or not, have a two-day cycle. Some markets have, excuse me one second. I'm not sure what's going on. We'll let that resolve here in a second. Shoot. Okay, I think this is recoverable. So everyone knows the difference here between the horizontal and the vertical. So let's do this. Today was on the calendar, it was the 2nd. So if we go to last Tuesday, that would be the 25th of the month. So Lennox, I'm going to scroll back to the 25th of September. There's the 27th. And again, this is something you can do by hand every day, especially if you're focused on one market and one time frame. So here's the 25th from a week ago today. Now, Lennox, when you first look at this, Linda, when you first look at this, your brain is not wired this way. Humans are not wired to have a data mining perspective. In fact, researchers have discovered that we suffer from something called the recency effect. We place tremendous importance on things that are happening right now in front of our big eyes. It's one of the reasons why the news cycle has sped up so quickly. Politicians and corporations have discovered that if we throw something new at you every 10 minutes or every day, you'll forget what happened yesterday. Facebook recently announcing a breach of 50 million users. They've discovered if they make another announcement 2 days from now, people forget the fact that nearly 25% of Americans' personal data have been essentially distributed worldwide. It's just how we're wired. So what I'd like to look for now, Lennox, is to see if there's any correlations between what happened over here and what happened over here. So I'm going to go back starting at 939 in that 930 area, and I'm going to start to look to see if there's any correlation between the two. So let's start with the red arrows like we did last time. If I just take this week today and I look for 948, I'm going to pull it up, pull it up, pull it up, pull it up. There's 930, 945, 948. Lennox, can you see how the middle of that pivot, I have to stretch it out because it was such a hard down day. Can everybody see that there's a triangle right here? And a doji right in the middle, which structurally is significant. The market paused, had a pullback, and then dropped down. So over here on the 3-minute chart, I'm going to put it at 945. Okay. Now I'm going to work my way over to 1033, 1030, 1033. And you'll notice, while it's not a tremendous reversal, it's also, Julian, in the middle of another small pullback. Linda, would you concede that is in fact there? We're not looking for big moves, but Linda, what I'm looking for is evidence of a push. Whether it's an algorithm or a prop firm or a bank, somebody is doing something at the same times in the same directions in this market on the same time frame. Okay, and then we'll work our way over. 1054, I think, was the next one over here, 1054. And as I work my way over, here's 1048, 1054 right there. I'm building a statistical database to see which of the times show any historical concurrence. What times are things happening with any kind of repetitive accuracy? And we're not trying to blow smoke up our butts and convince ourselves that things that aren't happening are. In a minute, you'll see what a computer does when we instruct it to do what you and I are doing manually. But you're starting to see evidence, 1112, of the things that we were searching for. So now 1103, 1106, 1109. 1112 is the first one of the times, Linda, that we don't have any coherence. It's not consistent at all. And so I'm just going to draw 2 lines there. It's off, however, by 1 bar. Lennox, would you agree that if I took this signal here at 1112 and I moved it up 1 bar to the right to 1115, and I did the same thing over here, would I be violating anything if I moved this to 1115 on this side, which turned out to be a bull candle as well? The market dropped right off the side of that. Is it okay if I do that? Average the two together. 1 week it was 1112, 1 week it was 1115, and both of those times there's a precipitous effect. Somebody somewhere hit a button and moved the market 3 or 4 ticks. You know by now with the high-speed algos that 1 tick over and over again is enough to make these bastards rich. Okay, so the next time after 1115, the lowest signal I have here is 1130, and we're just going to fill this in. And 1127 is the low over here before it shoots up. So I'm going to call this 1124 to 1127. On this side is the low. Over here it's 1130. If I adjust 1124 right here, I'm in a better position if I average it down to 1127. But I know there's a turn right around this time. Somebody comes in and tries to drive it back up again. Okay, the next time that I have on the right is 1206. 1206 is food around the corner for me. 12 o'clock, 1203, 1206. Okay. And on both sides of the market, we seem to have coherence again. And over here, I have 1042 as the big pulse up. Over here, it's 1045. So Lennox, I'm going to move this one over to 1042. Now, without going too far down the rabbit hole here with you, how many of you, okay, 1103, I'm sorry, I missed this one, 1103. How many of you are having a light bulb moment right around now? How many of you are sitting there and going, holy cow, that's kind of ridiculous? Okay, so what we've done here is we're starting to uncover times where things are happening with repetition. Now, these times are based, again, on repetitive patterns that are using a vertical analysis. We could go back and look at what happened in the market yesterday. Do the same thing. So here's today's price action. And we're building, we can imagine an Excel spreadsheet perhaps Kathy, where we're keeping track of these times. So Linda, can you imagine a database that you keep track of where you're writing these times down as they recur week after week and the direction that the moves are occurring at? For example, 1042 was a big low today. Wayne, do you see what happened at 1042 yesterday? So 1 week ago, 1042 was a bottom, specific to a weekday. Yesterday, 1042 was a bottom. Today, 1042 was a bottom. So Linda, do we have permission, statistically speaking, to make an assumption about next week? Can we say with any kind of scientific assurance that 1042 next week has a higher than ordinary potential to be a higher probability time? Of course. We're starting to debunk the idea that anything and everything can happen randomly in the market. We're starting to see the more you do this, and again, I've been doing it for a decade. I've trained close to 5,000 people how to do it. We're starting to see that there's way more to this than reacting in real time to the market. Oops, let me put that back there. And we'll just put a little green arrow right there. Now, as I mentioned earlier, we're not hardwired for this. We're not. Our brains aren't set up this way. We survive every day in life by looking at what's right in front of our faces. Okay. Corporations, financial institutions, news organizations are keen to provide that right in front of our face information. The next phase of the process involves fighting fire with fire. There's an old quote, I want to say it's centuries old, where it says, "You defeat the enemy by learning the times which the enemy moves and knowing those times in advance." In essence, study your opponent and know them better than they know themselves. I knew, for example, a lady who was part of our Bible study at one point when we used to have them before the group broke up, who suspected that her husband was cheating on her. And we knew the guy, stand-up guy, accountant, you know, he had this, he had a collection of biblical artifacts, including oil lamps that carbon dated back 1,500 to 2,000 years ago. If there was ever a guy that we didn't think was cheating, it was Joel. Well, his wife hired a private investigator. And what the private investigator did was follow Joel around town and kept track of where he went and what time specifically, Lennox, he was there. And lo and behold, he discovered right around 12:30 every day of the week, he was not working at the hospital in the accounting department. He was at La Quinta. La Quinta, for those of you that don't know, is a lower cost hotel, nothing against the hotel. And not only was Joel there, but there was a nurse from the nursing department, and forgive me for drawing a sexist skirt symbol, but that's all I know how to do to emphasize the point. So he noted that this happened every day, and his wife, Sandra, decided she was going to catch them in the act. And Lennox, one day she got there at 12:15, anticipating that something was about to happen. She didn't get there at 8 o'clock. She didn't get there at 2 o'clock. Dennis, she put herself in a position based on a behavioral pattern that was projected to recur. And of course, she caught him in the act. They took photographs, and the rest is, as they say, history. So here's what I did. I built a tool that does this. I have examples of it here on a daily chart. I have examples of it on an intraday chart. Let's go back and look at the E-mini S&P today on a 3-minute and a 5-minute chart. And I want you to see how this works in a automated environment. We are moving steadily towards marching progressively to a artificially intelligent trading environment where computers and artificially intelligent assistants will help us make wiser and more intelligent trading decisions. The age of reading the tape and watching a ticker put information out or reading the order flow, it's getting harder and harder to do that as banks' computers move orders faster and faster through the pipeline. So inside of this program that we've named Time Warp, we like to name things quirky, nerdy things because we're quirky nerds. I've instructed a program for NinjaTrader 7 or 8 to do something very specific. And in this case, Lennox, there's some really cool stuff going on. Linda, no BSS here. Look what's going on. I've asked the computer to look specifically at the behavioral pivot times for crude oil futures. There is a tremendous time-based correlation. We had more time, I could go through the example that I just reviewed with you again with crude. In Lennox, what we discovered is the E-mini S&P is coupled to the behavioral times of crude futures. Let that sink in. Why do we go to war in America lately? What do we fight for overseas? Where are all of our Predator drones firing their Hellfire missiles as we speak? Countries with large swaths of sand covering hundreds of millions of dead dinosaurs miles below the surface. And what we noticed, Lennox, was this. If we asked the computer to look 1 week ago, 7 days, right? There's our vertical analysis. And Dennis, we asked it to also look 2 weeks ago, a second jump of the checker 2 weeks back. And then Linda, we said, hey, go back 3 days on the calendar and then go back 6 days. So a combination of horizontal times and vertical times, a blend, a Toyota Prius hybrid of the two types of analyses, enough to make our heads go, but piece of cake for a computer, right? After 2 years of using the program and trying different combinations, we've got a fairly thorough database of resonant combinations where the results are pretty amazing. Enough where people are making money fairly consistently using these predictions. And so we've said, hey, go back and look at those times and project the results of those times forward into the future. So when we have a 3-day look back, Dennis, the farthest forward into the future I can look is how far? 3 days. So one of the traps that traders get swept into when they purchase new software from a company, there's a very devious trick that many, we joked earlier with Jason about deceptive marketing practices. There's this concept of repainting. Has anybody got suckered into a product where the signal repaints? or bars that print 3 to 4 bars after the signal. Every signal on this chart, Jason, was carved in stone since 3 days ago. Now there's quite a few signals on here, right? Because I have a relatively low swing strength on the analysis. This one trader uses it for scalping. And down below, you'll see there are two components. There's the answer to the question, what times should I be watching for? And then a direction. So any of the times that are described with a blue line are those times that we uncovered manually with a red arrow. Kathy, there's a preponderance of data to support an estimation of selling pressure at that time. It's like Joel at La Quinta, 12:30, there he is with a grin on his face and a pocket full of blue pills. You can bet on it. And conversely, the times that are appearing on the bottom are the times that the program, our algorithm, the artificial intelligence, whatever you want to call it, that helps you sleep at night. The program that's way better at finding these patterns is essentially trying to elicit a response from you and say, hey, Dennis, when you get to 1019, be careful. Because who, what, where, God knows why, it tends to go up over and over and over again at that time. Now, you'll also notice that when we get to the right side of the chart, the market's obviously closed. Dennis, you see how those lines extend forward into the future? My data feed shut off. But if I turned it back on, it would fill all the way up into the 430 and the 436. But you'll notice, Dennis, as I squeeze the chart, that these times are waiting for me into the Asian session for tonight. And I have 3 days of predictions waiting for me to the right side of the chart. And you'd say to yourself, well, who gives a rat's patootie? And you would be correct historically in saying that, but we would need to give a rat's patootie because one of the things we see when we got to the times that the computer warned us about, a preponderance of them, just like our vertical analysis, followed through on the repetitive technique. Meaning most of the times, not all of them, right? It's never going to be all of them. 1044, clearly not. But 1050 shoots straight up. 1052, Dennis, there's that plus or minus 1 bar, right? And 1101 is clearly the center of the pivot. In the same way our manual method revealed those times. So we want to pay attention to the right once we've developed confidence in the technique because these times matter. And for the first time in many of your careers, you have an estimation of risk and reward. What the crap does that mean? Well, let's look at another example before we go too deep down the rabbit hole. Just so you know that I'm not beholden to lower time frames, I pulled up a pound-dollar chart on a 15-minute time frame. And you can clearly see here that the trend in the sterling dollar has been down for a while, right? At least several days. And so, Dennis, we now create a composite of risk and reward windows. What do I mean by that? I mean that if the trend is down, historically, most traders do what? If you ask 100 traders if they do this, what percentage of them do you think would say me? Okay, and here's what I've observed, and it might not be your case, but I think it is. They let losers run and cut winners, cut winners short. This is not a Donald Trump webinar. So when we have the element of time, we know, Dennis, when something should start, or how about might start, and when something should or might end. Okay, now think about the psychological ramifications of that. How does that affect your confidence? If you know when you're in a position that doesn't start working right away, doesn't smell right, something's wrong. Or when a trade starts working, Kathy or Linda, hey, this thing is moving. I've got 17 more minutes. I've got an hour and a half. I've got 2.5 hours. I have 2 more days before I got to beat feet, grab my crumbs from the table and leave. So one of the setups that I teach involves Dennis watching for the signals in the direction of the trend. Think of it like the house is on fire. And when we get to these times, Dennis, the arsonist, throws a gallon of gasoline on the fire. It really starts to rage, right? And so everywhere I'm putting a red line is a time that the computer was warning me that gas was going to be applied to the fire. And now, Linda, conversely, everywhere you see a white dot corresponds to a counter trend signal where in the computer's estimation, there will be opposition to that move. Now, maybe you don't exit at exactly that time. You're looking for confirmation in your indicators, or you're watching for a structural resurgence. You're looking for divergence. You're looking for any one of a number of things. But Dennis, you start to see where these windows are, right? The computer is saying, look, that's all the time you have before somebody steps in and takes charge again. Does that make sense, everybody? You know when the move should start, and you have an idea of when it should end. And if the move should start and it goes in the opposite direction, or after 20 minutes, Linda, you're sitting there and it hasn't moved at all, I don't think the sellers are here. This is not the hill I want to die on right now. Okay, and we see tremendous examples of that in other markets. For example, here's crude futures on a 3-minute chart. If you're watching at home and you own the software, I have it set to the NYMEX real-time trading hours session template. And so, Dennis, obviously the price of crude has been going up. And so we can apply that technique and say, hey, if I arrive at either one of those manually derived signals using the technique that I taught you earlier, or I rely on the software to do it for me because it does it a lot better, I can look at these times as opportunities to look for entries into the market, right? Now, in this example, I have a signal that prints on either the open or the candle to remind me this is the time, just like the Billy Joel song. This is the time to remember because you won't remember. And Dennis, what I like to do is say, I'm going to put this 5 to 7 ticks away from the low of the candle. Most of the 1 to 3 minute charts, I have a maximum 5-tick gap. And so Lennox, if that window opens, if the bank opens the vault just enough for me to get my hand inside of there, now a clock starts ticking. Imagine Tom Cruise dangling from a piece of Kevlar line, dum, 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 and there's a ticker watch that he's looking at. Come on, Ethan, you got 2 more minutes before the guard comes back. Dum, 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 and he's out. I call this method the caveman method. So simple, even a caveman could do it. Boom, 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 ding. And then every once in a while, Lennox, loser. And then over here, look, they didn't follow through. Over here, we see the drop at 924. The next signal is at 1033. Luther, I don't catch it. Minus 13. But watch. Then it starts to Charlie Sheen, #winning, and I start to grab back at these times during these windows. How does it work for Forex? It works tremendous for Forex. For the first 6 months of the company's existence, Linux, the very first 30 to 60 customers exclusively traded the pound yen on a 15-minute chart. Little known secret, we started out as a Forex company. And then as we migrated to NinjaTrader, most of the customers who found us, I would say 75% of our users are futures traders, 20% are Forex, and 5 to 10% are a blend of futures, Forex, and equities. So we could put this software to use on a Tesla chart intraday, on the Aussie dollar and hog or cattle futures, and do the same thing across anywhere from a 30-second chart to a 4-hour chart. Right? That's why we used the pound dollar 15-minute chart earlier, right? So we can change the time frame. The computer goes out, it does all of its nerdy studies. And now Linux, can you see off to the right how I have the times ready for tonight's UK session before we even get there? They're waiting for us. The data is there, it floats to the surface. I've been waiting for a trader like you to take advantage of me. Okay, any questions up till this point? Method number 1 is the caveman method. Your losers, as you see, Linda, are about half as big as your winners. And what that tells me is these windows, when they open Linux, are significant, right? So here we have -8, -11, -13, -8, -10, but we have +68, +14, +3, 13, 25, 35, and 26. So Whitney, over time, it tells me I can keep my losers relatively small. And when the winners are working, I know how long I have before that vault door closes without my fingers in the crack. Okay, we can look at other markets too, like gold futures, for example. This one's on a 10-minute chart. And today, Linux, you'll see that this candle closes over the moving average. I call this a crossover trade. And now Linux, I have an hour and 40-minute window. Ding! We arrived at the floor. First floor, underwear, fun to wear. That's $910 move per contract. Then 1010 comes along and the computer goes, psst. I don't know if you remember this, but over the last 9,500 bars, these suckers like to push the market up higher. Please don't short it. It's not time to short it, not yet. There's another $280. Now, Linda, can you see right here how they run the stop at the selling pressure time? Yes or no? At 11:20, right here, there's a double top. Kathy, right at the time we're waiting for selling pressure, can you see how they lured people in to that breakout? Muhammad, can you see it? Mirza? They will trick you. They will make the setup appear one way when in fact they require your liquidity to make this work. That's exactly right, Gavin. Good post. So we started to ask this question in our webinars and send out surveys. And we said, what percentage of you get into a trade that immediately, and you don't have to answer this, goes against you? How many of you trade and you feel like, Kathy, there's someone looking over your shoulder, and the minute you hit the buy button, they go, I can't believe she bought. Or Lennox, you get in a short, and it's like someone lit a Tesla rocket off, and the market zooms away. You're trading against some of the most unscrupulous, unregulated, unaccountable people in the world. 2008, we had a wake-up call when the banks essentially screwed the universe. And at the end of it, walked away with trillions. When you hear about our debt, $20 trillion, whatever it is, the banks got like, what, $7 or $8 trillion just to check. Where do you want to put this pile of money, Mr. Diamond? Just put it over there. Put it with the Bear Stearns stuff. At the very least, if you employ this method using either the manual technique that I'm teaching you or the automated method, you're going to start to discover that right around these times, they're tripping people out with these little stop runs before they go into the next move. They do this to create liquidity. You see, you are a liquidity machine for them. They need your orders to get things rolling. And so you'll see these stop runs, you'll see these breakouts, you'll see these moves where you're inclined to make the opposite decision and the opposite choice. And so in markets like the NQ, where the tech stocks are really rolling, you can see evidence of where they draw a tremendous amount of people in on the breakout right before the bottom ricochets out. And you look at that and go, yeah, no, I don't want to sell it there. No, thank you. No, I'm not interested. You go play your games with somebody else, right? You can see the tremendous stop runs in these areas. And so again, we teach our customers, just take advantage of these windows. When the trend is up, be looking for up signals. When the trend is down, be looking for those large sweeping down moves, right? Any questions about any of this? Because we're coming up on the 1 hour mark, and I've learned in the past to respect that time. When we roll over, I know a lot of you have commitments, and I don't want to go past that point before giving you some stuff in addition to what I've already taught. Any questions? If not, I have some resources for you that I'd love to pass your way. Conversely, we're not the first company that's ever taught this technique. There was a weird guy who believed that this occurred over a century ago. His name was William Delbert Gann. He came from a small town in Texas called Lufkin. It's not too far from where George Bush was born. So when you read Gann quotes, you're actually hearing him in your head with a GW accent. We're going to get Osama dead or alive. Time is the most important factor of all, and not until sufficient time has expired does any big move start up or down. Time is the most important factor in determining market movements. By studying the past records, you will be able to prove for yourself that history does repeat, and that by knowing the past, you can tell the future. And if you're curious as to whether or not Gann was able to leverage that, there's a wonderful interview where they actually followed Gann around and watched him trade live. Richard Wyckoff, arguably the father of modern volume spread analysis. I posted the article link into the chat box just now. And you'll see the kinds of trades that he took that are based on times. And he knew precisely when to get in and when get out. The capital with which he operated was doubled 10 times. So at the end of the month, he had 1,000% of his original margin, right? These are what people observed him doing, real time taking trades using the techniques that I've taught you here today. Now, if you want to continue forward using the manual method, I'm happy to work with you. And if you have any questions, you can email me and I'll give you some information about how to get in touch with me in just a second. This technique works. Okay. Now, there's two other things that you can do, and we're pretty transparent about how we prove this works. Every week, I give out 2 days worth of market forecasts in advance. And if you want to receive those for Wednesday and Thursday, I haven't sent them out yet. Everyone who's on my newsletter list gets a copy of them. I'm going to put a link in the webpage link rather, in the chat box. And what you need to know, this will actually show you some training videos on the earliest forms of our software, something we called Flux, that's now called Prime. And Lennox, if you're more interested and want to learn more, Kathy, it's not a spam kind of thing where we actually only give people information. You're not going to get 50 emails a week with coupon codes and phone calls from college students asking you if you'd like to make $1 billion. But I need to know that you want the information. So all you got to do is put your name, your email, and tell me what market you're looking at. And then you'll get a series of training videos that take it a little deeper beyond what we've done here today. Think of it like a mini course that should help you develop your manual method if you're going to go that route. The other thing you can do is go one more step. And I'm not presuming anybody here wants this or forcing this down your throats, but some of you historically are ready to do such things and want to get started. You're a take charge kind of person and you're tired of losing money and the method makes sense. Do me a favor, click on this link right here. backtothefuturetrading.com/tachyon time warp. It's a cheesy name, I know, but it's fun for us, so it keeps us motivated to continue. At the very bottom of that page, there's a big orange button. It's fairly intimidating, I know. The software is normally $24.95, and that comes with a ton of stuff. Personal training, a live training room, free updates for life, 2 computer licenses, unlimited computer changes. It's a veritable cornucopia of value. However, if you click on that orange button, there is a big fat spot for a promotional code. And at Jason's request, I've put together an offer for you guys. And if you type the word WARP, W-A-R-P, and then the word OFF, O-F-F, WARP OFF, and hit apply, just for you guys, it takes $500 off the price. And so Jason's asked me to put something together. The first 5 people who put that promo code in there are going to receive a $500 discount in addition to everything that I talked about earlier. You're going to get free installation. I'm going to personally set up your charts on NinjaTrader 7 or 8. I'll teach you the best settings, the best parameters, the most accurate values that I'm aware of after 10 years. And I don't know how many thousands of installations that I've done. Access to the unlimited basic training room in the mornings, Eastern time, first few hours of the day, first few days of the week. Unlimited video training resources, lifetime updates on the indicator. There's just a ton of stuff. And so if you're the kind of person that sees something like this and wants to take advantage of the offers when they're hanging low on the tree, Warp Off, WARPOFF, will get you that discount. Okay. Best way into our world is the video demo file. You're going to get the invitations to our weekly webinars. You'll get invitations to our end of day swing trading webinars with predictive software too. Many of you asked a question about this E-mini S&P chart. All of these times were known 30 days in advance. And Dennis, we're 2 days away from the next selling pressure signal, 14 days away from the next buying pressure signal, and 28 days away from the selling pressure signal after that. So we have options for those of you that take swing trades on longer time frames and want to get that information as well. But you have to be involved. You have to take that one extra step and just get involved in the funnel. backtothefuturetrading.com/demo, first name, email, pick one, show me the demo, and you get all that stuff. And if you don't want to see it anymore, you just unsubscribe. We're part friends, part company as friends. If you have a pressing, burning question, I just got to ask him this one thing. I'm going to give you some information right here. You can reach me. You can reach me on an airplane. I am Michael at backtothefuturetrading.com. No S. It's not Back to the Futures. Back to the Future like the movie. Trading.com. I also have a Skype account, and I'm happy to help you with any questions you have. Integra-Michael. It's a Skype name from a long time ago, and it's just a pain in the butt to change it. And then if you want to text me or reach out for a phone call, I'm happy to help you. Again, with the manual method, with the automatic method, if you want to talk about politics or making chicken pot pies, whatever's on your mind, I'm happy to give you any information that you need. I do care. I am honest to a fault sometimes. I promise I'm not out to get you. Right after you get the software, I don't rub my hands together and go, it's the beginning of a long conversation and relationship. We think of clients like friends and family, and many of our customers are here today and can testify to that fact if you need to talk to someone just to be sure. The recording will be sent out to all the registrants by Jason and Julie at the end of the day. I want to thank you for hanging on for dear life to what is normally a very complex subject. You did really well today. This is not easy to learn, but it is worth it. And if you want to survive, you have to adapt, you have to advance and recognize that this is not a fair game. These people are not playing by normal fair rules. They declared war on the American citizen, on the average investor. You are a large chunk of red meat. And statistically, there is a 90% chance you will lose 90% of your account in the next 90 days. Some of you are hanging on for dear life. We build excellent tools, okay? Not out to get you, but there's a purpose and a place for everyone in this community, everyone in this environment. We know ours, and we're really good at it. So if you'd like to hit harder with a bigger hammer. We make a great hammer. And I want to thank you today for your time. It has been a privilege. It is an honor. I hope and trust that you've learned something today. And if you haven't, or were offended in some way by something that I said, I am truly sorry. And I did do my best. So I know that I brought it to the table. Stay tuned for the recording. Make sure you take advantage of that demonstration. Those of you that do, I'm going to send out the forecasts for Wednesday and Thursday tonight at midnight. So if you can sign up for that demo, get on that list, you will get the emails with the forecasts from now on. And I'm happy to have you as a part of our newsletter family. Remember, the markets you trade are not random. You can look back in time manually or automatically. You can train your computer to find it, or you can painstakingly look for the times yourselves. Please stop focusing on price action. Look at time. There is a wealth, a veritable cornucopia of useful, statistically relevant, predictive, and leading information on the right side of your chart. Now that you know it's there, happy hunting, everyone. God bless. On behalf of everyone here, our entire staff, thank you for your time once again. You guys have a great evening. I'll talk to you later. Bye-bye.